Hey everybody, it's your friend Robert Cohen coming to you today from Lexington, Massachusetts. I just wanted to have a different type of conversation with you today. Not about a particular property, not about our schools, not about any of the wonderful things why people move to Lexington. But I want to talk about the market today and some questions and concerns people have been asking me lately, especially in light of yesterday's increase by the Fed of 75 basis points on the mortgage rates. But that's a misnomer. It's not the mortgage rates. The 75 basis points they raised it is on the Fed rate between banks, which is behind the curtain, if you will, of how mortgages work. But 30-year fixed mortgages have already baked that rate increase into the current rates, and they've been thinking about this for the last several weeks or a month that this was coming. So the market has already built that into its base. So that shouldn't scare people that the Fed has just raised rates yet again. But what it should concern people is that they're missing opportunities. They're missing wonderful opportunities to get in on this real estate market because they're scared of 5 or 6% mortgage rates. Historically speaking, going back 75, 80 years, a mortgage in the 30-year range, 25 to 30-year range, historically has averaged between 5.5% and 6.5%. When my parents bought their first house 57 odd years ago, they got a mortgage of 6%. When my grandparents bought their first house 80 years ago, their mortgage was 6%. So historically speaking, this is the norm, these numbers. Yes, in the last couple of years, mortgages dipped down to 2.5%. All that meant was that adjustable rate mortgages went on the shelf. I'll have that conversation in a second. So people didn't take adjustable rate mortgages. They just took the 30-year fixed 2.5%, 3% mortgages. Well, now that rates are moving back up again to the historical norm, something called an adjustable rate mortgage is coming back into vogue. And anybody who's been in the real estate industry for the last 5, 6 years has never dealt with an adjustable rate mortgage. They can't even explain it to their clients. What an adjustable rate mortgage is, it's just that. It's fixed for a certain period of time. Then after 5 or 7 or 10 years, it adjusts to the market rate. This is, in the weeds, if you will, but I can explain this further if you want to give me a phone call. But an adjustable rate mortgage today, a 10-1-arm adjustable rate mortgage, which means for 10 years it's fixed, and after that every year it adjusts to the market rate, you can still get those mortgages in the high 3% range. It just means that your banker is going to have to work a little bit harder to put that product together and explain that to you. But your payments will be substantially lower than if you were to get a 30-year fixed rate mortgage of 5.5% or 6%. So this is complicated stuff, but it shouldn't stop you from getting into this real estate market and buying a home or upsizing or downsizing or wherever you are on the spectrum, because the opportunities are still there. The economy is still fundamentally incredibly strong. I know there's a lot of naysayers out there that have been talking about how things are moving this direction, moving that direction, but fundamentally, the unemployment rate in this country is the lowest it's been in decades. Something on the order of 95% of people that were displaced because of this terrible pandemic we're in and lost their jobs, 95% of those people are now back at work in jobs that are paying higher salaries than they had before the pandemic. And property values are still rising, and jobs are incredibly plentiful. There are more jobs available right now in this country than there are job seekers. So I am truly an optimist. I believe that the glass is always half full. It's never half empty. There are opportunities out there to buy property and have a mortgage rate still in the 3% range. And there is this terrible imbalance with supply and demand. We have a tremendous shortage of housing in this country. We have not built enough housing to keep up with family creation that has happened over the last few decades. And especially in my market here in the Northeast, in the Boston area, we are way behind in terms of housing creation. So it's simple economics. The supply is not there, but the demand still is there. So prices have just gone crazy upwards. We're moving into a little bit more of a balancing act, and things are starting to get a little bit more normal. but there's not a drop of prices coming. I know people are thinking, well, we'll sit out this market and maybe prices will come down substantially in the next 6 months, 12 months, 18 months. That's not going to happen. As long as you have a supply deficit and a demand for new housing, and people and new families are being created at all the time, and people are still trading up or moving on or trading down, the demand is still there for more and more housing. And if you're going to wait this market out for the next 6, 12, 18 months, I can guarantee you a couple things. One, you're not going to get a house. And two, you're most likely going to pay even more for it down the road. Are we going to have a 7th year of 20+% appreciation over year? I don't think so. I think that's calming down, but I'm not seeing any variables that suggest the market will drop in price. Again, the demand is there, the supply is not, and that's not going to change for a long time unless zoning rules go out the window and builders can start building left and right, and that's not going to happen. We're going to continue to have a supply deficit for the foreseeable future. I've rambled a lot. I've thrown a lot of numbers, a lot of statistics at you, but the bottom line is this is still an incredible opportunity to buy a house. It's still a phenomenal opportunity to sell a house. So I've got buyers and sellers that I'm working with. Don't miss this opportunity. The sky is not falling. I know if you listen to the TV or listen to the radio, there's tons of stories that the economy stinks, the world is falling apart. That's just not the case. Hopefully, some stability will return in the Far East, in Eastern Europe, and that issue will resolve itself. It's tragic what's happening over there, but the economy is not going to continue with the inflation that we're having right now. I know the Fed their number one priority is to try and tamp down inflation, and I think they will beat this. But neither one of those issues is going to change the fundamentals of an imbalance of supply in the housing market. People still need to live someplace, and there's not enough houses for those folks to get into properties. I know the market is all over the place, but real estate was still selling in the Lexington area rather robustly when the market for mortgages absolutely peaked. And you're not going to believe this, but mortgages were 21.5% in the early 1980s. That's when it peaked. And when my wife and I bought our first home, we got a mortgage of just under 9%. And we were ecstatic that we were the first ones in our friends group to buy a house that had a mortgage in the single digits, not a double-digit mortgage. So this pendulum goes up and down. Households are still created. The demand for housing is still there. Don't miss this opportunity, my friends. If you have a housing or any real estate related issue, give me a call. 781-290-7331 is my telephone number. Check me out on any of my social media platforms. I know this video is probably a little bit longer than most of the ones that I've done, but this is important. The sky is not falling. There's tremendous opportunity right now. Don't miss it. Take care. Be well. Your friend, Robert Cohen.